Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello, and welcome back to the podcast. Thank you very much for being here. I hope all is good. Welcome to the newbies. We have a lot of them. I appreciate you, and I appreciate those of you that have been here forever and ever and ever. All right, today we are going to talk about some questions about loans. And one of the biggest ones, and I got this the other day, we are having a client-only conference. And I sent a text out and said, hey, is there certain things you want to see at the client-only conference? And this question came back, and it is such a good question. And it is a question I have not had in a really long time, so I kind of forgot about it. So thank you very much to the person who asked about it. But it is, how do I take a loan and pay that back for something like a car? Or maybe we're buying a tractor, or we're buying something that's not producing cash flow. So a car typically does not produce cash flow, right? If we are going to buy a computer, we are not going to typically have cash flow from that computer unless we're doing something with the computer. But if we are not, then, we don't have cash flow to pay it back. And, in all reality, though, my brain, I'm slowing down talking here because my brain is saying, yeah, but, you could really use that computer to create cash flow, or you could really use that car to create cash flow if you're going to do Uber Eats, or if you're going to do Uber or Lyft or whatever. There's a lot of things that could create cash flow. So I'm going to have to shut that part of my brain off. So let's just say that we are trying to buy a car through a policy loan, and how do I pay that back? It's really kind of a simple answer. You don't buy it then. And so just pretend like the policy is the bank, the actual physical bank. If you were going to buy a vehicle and you had to borrow money for that vehicle and you could not pay it back, should you be buying the vehicle? No. Even though it's your money in the policy, if we can't be honest and pay it back, in a perfect world, should we be borrowing it? No. Now, let's go to the bonuses of the policy. The policy says you can pay me back however you like, whenever you like. And so if I need that vehicle because I got in an accident, or my vehicle just died on the side of the road, or whatever happens, that I do need a vehicle and there's money in the policy, then you can pay it back however you like. That is the one bonus, is that if we want to make smaller payments until we get our bonus from work, we can do that. And then we can make a higher payment into the policy. And we can just send money to the insurance company, or we can just go online and make a larger payment. We don't even need to make monthly payments. We can make payments whenever we want. Now, that is a bonus. But it can also be an issue, because the last podcast I did, right, I said the reason this is going to fail is human nature. So we have to make sure that we are not just letting a loan go forever and ever and ever. But if the bank loan would have been $700 a month, you can pay $300 a month. You can increase that later throughout the years. You could make a 10-year payment back on your car. Don't recommend, but you could. Because here's the deal, especially on a car. Now I'm going to go on a little tangent here, especially on a car. I, one time in my life, did a 6-year note on a car. And it is when I started my business and I needed a car because mine was taken a you know what. And so I needed to get a new car. Did not have the option to say, oh, I want a new car. So I did a 6-year note on that car. By the time I traded it, I was not upside down, but I barely got what I owed on it. And so it was not like, I do not recommend 6-year notes, like 6-year or more. Why are you doing that on a vehicle? However, if you want to do a 5-year note back to your policy and you want to make small payments right away, and then 5 years later, you'll probably be in a different position financially, then great. Pay it up at year 4 and 5. Pay it up at year 5. Pay interest only for 2 years. I don't care. The insurance company does not care. But if you were, let's just go back to the original question and say, if I had to buy a car from the bank, could I make the payment structured on a 5-year note or a 3-year note or a 6-year note? If I couldn't do that, then I shouldn't be borrowing money from the policy to buy that vehicle. Now, the part there that we get frustrated with is, but Mary Jo, if I had that in a savings account, I could just take the money out of savings and go buy the car. You could. And you could still do that with the policy, right? You could borrow the money and pay interest only. But if you take the money from savings and you don't replenish savings, what did you do? You just stole from yourself. You just put all of your money into a depreciating asset. Now, if you need it, fantastic. Go take the money from savings and buy the car. But you still need to be an honest banker and you still need to pay it back. Now, if you're talking to somebody that saves money to pay cash for cars, guess what? They're going to replenish savings. They're always going to have enough to put back in. So if you have enough money to put back into savings to replenish it, guess what? You'll have enough money to pay back your premium loan or your cash value loan. Sorry. So it operates the same. We just try to make it very hard in our brains because it's a loan. Now, if we take money out of savings and we replenish it and deposit money back into savings, that's a different trigger in our brain, right? It's like we're not repaying that. When in fact you are repaying that, you're just replenishing what you took, but you're replenishing it without interest. So you're doing the exact same thing. It's just going to the life insurance company and not to the bank, to your savings account. So if you cannot repay the loan, get creative on loan repayments. Here's another thing. If you're making your premium payment and you borrow money and you cannot make the premium payment with the loan repayment at the same time, then your premium is probably too high. So a lot of people will come and meet with me and say, oh, Mary Jo, I'm ready to go. I am ready. I read the book. Let's go. And they're going to jump in with both feet, right? We might want to do a $50,000 premium payment. And I'm like, okay, that's great. But if we borrow 40, you need to pay 50 next year. And depending on what the loan was for, you might want to pay 40 back in 1 year. If it's for business operating or operating for farms or whatever. If you borrow 40 and let's say you buy a car and you want to pay it back over 4 years. Well, now you have to pay the 50 plus 10,000 every year back to the policy loan to get it paid back in 4 years. So that's $60,000. So can you afford the loan repayment and the policy premium? If the policy premium is way too high, then we maybe can't afford both. People sometimes forget that when they're setting up the policy that they have to Ideally, you want to pay both things. It's either the entire loan or it's a portion of the loan, depending on what you use the loan for. I hope that makes sense. So make sure that your premium is comfortable. And then you might say, well, Mary Jo, I don't want to make a small premium. It's going to take me longer to get places. Yep, it is. It is going to take longer to build the money in the policy to a significant amount. So then you want to pay a higher premium, but then you're going to have to understand that those loans are going to have to be interest only, or that you shouldn't be taking a loan because you can't afford to pay it back because it's not free to take a loan. So there's a lot of things to work out in that scenario. And that's why I'm here as an agent to help clients walk through that. But if you are talking to somebody and telling them how amazing infinite banking is, and they come back with this rebuttal, it's very simple. Don't take the loan. Or are you paying cash for cars then? If you're paying cash for a car, then you saved it up. So you were essentially paying back your loan from the last car in the form of a deposit into your savings account. It's the same thing. Are we going to be able to buy a car right away through the policy? I don't know. Depends how much money you want to put in. But if you have, the premium might need to be small. It might take a while to get there. But the money you're putting into savings to buy the next car, why wouldn't you just put that into the policy to buy the next car? Right? Yes, you're going to have a premium payment and you're going to have a car repayment. And so if all you're doing is putting enough in savings to buy the next car, you're not going to be able to afford the loan repayment. Right? So we're going to have to figure out what we have to do to increase our income to do that. Because the premium always has to be paid. So then the premium's going to have to be smaller. We might have to wait longer to buy the next vehicle. There's going to have to be a little bit of sacrifice so that we can start building our bank and be able to make the repayments at the same time. What else are you doing in your finances? Right? Are we going to eat out? Do we have lots of living expenses? Or are we truly already budgeted to the hilt and inflation is just killing us? Then maybe we have to figure out how to make more cash flow. So there's a lot there. But thanks for asking the question. I loved it. It was fantastic. So hope that answered other people's questions on the same topic. Let me know if you guys have other ones. This was super nice to get these questions. Don't just assume that everybody else knows. If you have the question, chances are somebody else has the question. So let me know if you have anything else, comments, questions, concerns. If you have not gotten the books yet, go to Farming Without the Bank or withoutthebank.com, grab your books, and then go ahead, schedule your appointment. And the second that you get your books, not the second, but within a couple of days of you getting your book, you will get an email to my calendar. Go ahead and get scheduled, because this is the time of year where people are scheduling like crazy, and then you guys are going to have to wait 5 to 6 weeks to get in to see me. That is not the wait right now. I think it's 3 or 4. So go ahead, get scheduled, and get on the calendar so you have your slot. Okay, I look forward to talking to you. You have a fantastic rest of your day.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.